Howdy who, all my stock market gamblers. Welcome today. I'm Tall Mike. So glad you're here. Well, what do we got going on? All right. So we had the stock market come down and then rebounded all the way back up, right? I mean, we're back right about at a record high on the S&P. NASDAQ's down a little bit farther, but S&P right about the record high. Had a little down day yesterday, but as long as we stay above the 20, above the 50, they can still push this market higher. I believe that. But I do believe you're going to get another down wave. It's called distribution, right? Now, the last wave of distribution, well, that was blamed on the yen carry trade. Now, that's a shot over the bow, right? Okay, so they say this trade unwound, right? 3 days, $20 trillion is the yen carry trade, and they say that's what caused it to come down. But in 3 days, it fixed a $20 trillion problem. Now, that's not my take. My take is that that's the first shot over the bow. That's the warning signal. That's the canary in the coal mine. You're going to have another downdraft. Now, will they push it up more first? Very possible, but you're going to get another downdraft. Now, do I think this downdraft is the big one? No, I don't. Not unless the junk bonds are leading the way down. The HYG is the junk bonds. You can look at the HYG and you can see if the junk bonds are coming down. If the junk bonds are leading the way down, that tells you that it might be the big one, but I don't think we're there just yet. But if the HYG leads the way down, that's a big problem, right? Okay, so we're going to get another downdraft. See, a lot of people think the whole first downdraft was it. That's it. Problem solved. The yen carry trade is solved. No, it's not. It's like the banking crisis. A lot of people think the banking crisis is done, right? Silicon Valley Bank was just the shot over the bow, the canary in the coal mine. There's going to be a lot of them, and they're all going to start to go down. Okay, let's get over to, well, the real estate market. Now I get comments, right? I get the comments. But Mike, Yahoo says that my house is still going up, so you can't tell me that they're going down. Now, first of all, what does Yahoo want you to do? It wants to get people to go out and buy a house. Yahoo, mainstream media, they want you to think everything is rosy and you should get out there and buy, right? They want you to go find a realtor and buy from the realtor, right, at these record highs. So they're telling you prices are going up. Hurry up and get in. Look at the information they have, first of all, is 2 months old. 2 months old, 60 days old, right? Okay, now why is it old? I don't know. In the digital age, it should be instant. That's what us real estate brokers, we get instant information, right? And I'm telling you right now, there's a shock going on in the real estate market. I mean, the real estate market is locked up and days on market extending, price reductions everywhere. But the final sales prices are also becoming much, much lower. This is the current information. You're looking at old information on Yahoo if you think your house is still going up. Now, here's the other thing. Your house is getting crushed if you look at real terms. If you look at your house compared to the price of inflation. Your house, it wasn't ever going up. It was the dollar that was coming down. Now, why is the dollar coming down? Because they printed too much money, because we have inflation. So it pushed your house up, right? 20, 30, 40%, right? But that's because the dollar was coming down 20, 30, 40%. They printed that much money. They printed an extra 40% of the money supply, and that pushed your house up. Your house isn't going up. Your house right now is getting crushed in real terms. In real terms, see, they'll tell you that inflation's down below 3%. And if you listen to the government, you might actually believe that. It's not true. We're still up around 10%, as sad as that is on inflation. Inflation's still running about 10%. It's going to be really interesting when the Fed pivots, when the Fed cuts rates in September, with inflation still running up here at 9, 10%. They cut that rate, it's going to take off again. It's going to move up, but they're telling you it's at 3%. But Mike, why would they tell me it's at 3% if it's really at 9%? Well, because they lie. That's what they do. I'd hate to tell you this. Look at the jobs number. Man, that was fascinating, right? That was fascinating. They only missed it by 800,000 jobs. They thought they created 800,000 jobs, but they didn't create 800,000 jobs. They had to revise that 800,000 jobs lower. Now, is 800,000 a rounding error? No. They're flat out lying to you. It's ridiculous, but no, we're not at 3% on inflation. We're still running up around 10%. And that's why your house is really going down in real terms. Now, yeah, it's staying here in nominal terms. Soon it's going to come down. Nominal terms, you look at the current prices, they're selling 100,000, 200,000 below the last sale. Prices are coming down, but people don't get that. Now, if you look at it in real money, your house is getting decimated, right? In real money, gold and silver being real money, they're going way up. Your house is getting destroyed. Your purchasing power is going away. You should protect yourself and get your savings into real money so you'll be able to afford that house. Look at, I keep telling you, 500 ounces of silver will buy the average price house. Average price house, $420,000. Average ounce of silver, that's called 30. So you put $15,000 is going to turn into 430, maybe not, but that 430 might get cut in half down to 200, and that 15,000 might turn into 200. You might get silver up that $300-400 an ounce. But Mike, you're talking crazy stuff. That'd be like a 10x multiplier on silver. That's correct. That's what you're going to see. You see, right now, they don't have the physical silver. They got 400 ounces of paper silver for every 1 ounce of physical silver. And someday, some rich guy's going to come in and break these exchanges. I mean, a billionaire could do it. You buy $1 billion worth of silver and you want to take delivery of it on one of these exchanges, all of a sudden they're bankrupt. Silver will go to its real value because they can't deliver it, because they don't have $1 billion worth of silver on the exchanges to deliver. You see, the physical product they don't have. Yes, they have the paper, and they go, well, we'll give you this paper. Look, paper is not silver. Silver is going to 10x. Gold is probably going to 5x from here. Yeah, gold, $10,000, $12,000. I see that easily. I mean, that's not even a surprise stretch to me at all. But what I keep saying, going to become 1-to-1 with the Dow. Dow at 40,000. Now, here's something interesting. Dow's at 40,000 now, right? The Dow was at 10,000 in the year 2000. Okay, so it's gone up 4 times. What was gold at the year 2000? About 300, a little less, about 280. Okay, so what has gold done? It's gone up 8.2 times. 8.2 times, right? Where the Dow has only gone up 4 times. That's already starting to become that 1-to-1. It's starting to get closer, and it'll continue to do that. 40,000, no, gold's not probably going to go there. Dow probably going to come down to 10,000. Gold will be up there at 10, 12,000. Maybe they all meet at 12,000. 1-to-1. Now, right now you can look at the S&P. S&P, what is that? 5,600, right? Okay, gold at 2,500. It's about 2.2 times to get one S&P to the gold, right? 2.2 ounces of gold will get you one of the S&P, about 5,600. Okay, well, that means the stock market incredibly rich and means gold incredibly undervalued. Normal is closer to 1-to-1 on the S&P, 1-to-1, which would put gold about 5,600, or the S&P would have to come down. Now, I think the S&P will be coming down. That's just normal. When this thing overshoots, you're going to get 1-to-1 with the Dow. Now, we've got a very good thing going on right now. We got gold. Gold is pulled back, right? It's pulled back. Maybe it'll pull back some more. I really wish it'd get down to 2,000, but I know it's not going to go that low, but I hope it does. I got to get some more. But these are starting to be the dips. Yes, it got overbought up here, 2,500, but it's going much, much higher, much, much higher. But on this pullback, yeah, I'd take a shot at it. I keep stacking. I'm a stacker. I keep buying, right? Now, here's the other thing. All right, this comment, I got a few of these. A lot of people got upset with me when I talked about price controls, when I said there's going to be a big food shortage coming. And they all flamed me, right? They go, but Mike, you're letting your politics get in the way. This is Kamala's idea. And Kamala, she's smart. She's going to put price controls on. You're just letting your politics get in the way of this thing. No, I'm not. Look at, I hate all politicians. Let me tell you why. Why? Because they're doing this Keynesian economic stuff, right? They're doing the price controls. They're monitoring the interest rates, keeping interest rates at zero instead of letting the free market run. For 14 years, they kept them at zero. They try to manipulate the markets with this Keynesian economics. I want free markets. I want sound money, gold and silver, and no politician wants that. So I pretty much hate them all. But here's the thing. It's not political. Look, price controls have failed 100% of the time. If you study history, this is simple economics. You put price controls on, you're going to get a shortage. Now, why? Why am I going to get a shortage? Look, you put price controls on things, you cannot produce at that cost, right? Let's say the cost of production goes up above where the price control is, where the cap is, right? No one is stupid enough to sell it. No one's stupid enough to create it at a loss. So what happens? You get a shortage, right? There's no supply at that point. Yeah, you can only sell it for this amount, cost this amount to produce it. Nobody's producing it. You don't have any product, so it doesn't matter where the price control is when there's no supply. So yes, there's going to be a shortage of food. You're going to see it coming. And yes, there could be food lines. And no, this is not political. This is just a fact of simple economics. A lot of people think I'm political. Look, I would like to see the government reduced in size by 50 to 80%. We do not need all of this government. This government is holding us down. This government is putting constraints on the economy. You let the economy be free. You let money be free. You let money be honest and anonymous. That's what gold is. Gold's honest money, right? Weights and measures, right? It's anonymous. Nobody knows you have it. They can't control it. They want to put you into that, what is that? That CBDC, the central bank digital currency. That's what they want to do so they can keep an eye on you, so they can see where you're spending your money. I don't want anybody to see where I'm spending my money. I want my money honest, and that's gold and silver, right? You can't print that stuff. Right now, this paper stuff that we're printing, it's going to cause a lot of problems. This is Keynesian economics. This is Keynesian. I'm an Austrian economist. I want free markets. I want free money, and it would solve 90% of the problems in the United States right now. No politician's going to solve these problems. It doesn't matter who gets in. So no, this is not a political statement. Yes, there will be food shortages when you put price controls on food. You know, think you're going after the grocers who's just gouging the people? Look, at the grocery stores could be gouging you for the last 20 years. All of a sudden we got people get upset because they're gouging during a Democratic administration. Really? No, this is simple economics, right? The reason prices are going up so much is because the government prints the money, and they're printing too much money. It's ridiculous what they're doing. That never gets blamed. Gets blamed on the corporation. Getting blamed on the grocery store. You know the margins in the grocery store? About 2%. 2% are the margin in the grocery store. Everything has more than a 2% margin on it. I mean, everything, right? But they're not price gouging? No, because we got food inflation, they're price gouging the grocery store. I don't think so. You stop printing money, you get back to free money, sound money, free market economy, you're going to solve this problem, but you're not going to solve it with price controls. It's a stupid idea. I'll stand by that. I don't care who said it. Yeah, that's Kamala's idea because she's not that bright personally, but either is the other guy. So that's not a political statement. It's just a dumb idea. Anyway, I got a little carried away with that. But we're going to see the standard of living in the United States just free fall. It's going to free fall. Now, why is that, Tom? Why is the standard of living in the United States going to free fall? Because people are not going to sell us stuff for our dollar bills anymore, right? Right now, what happens? Okay, they send a boatload of stuff from all different countries, right? What do we ship out? We don't make anything here. We make dollars. So we put dollars in the boat and we send them back out. Well, you got a problem. You got the BRICS coming on, and they're a 40% gold-backed unit, right? Okay, so when you get something that's gold-backed, that's real money. People are going to want to exchange their real stuff for real money. We don't have real money here. We have this fake dollar. The dollar is going to be going away. I suggest you get some real money while it's still on sale, and it can protect you. But what's going to happen is they're not going to send us the stuff anymore because they don't want our dollars anymore. The dollar's going to go away. It's going to have to be real for real. Maybe we plant some extra wheat and we can ship that out and get some products in, but it's going to be real for real. It's not going to be real stuff for our fake dollars anymore. You're going to have to get back to sound money at some point to fix all these problems that the government, yes, the government mainly, but also the Federal Reserve has created for us. And yes, you need to reduce the government by 80%. You need to get rid of the Federal Reserve completely. Now I understand you can't make these changes overnight. That would be way too much chaos, but we got to start pushing in that direction. And those would be the type of politicians I would vote for, but there aren't any out there. Both sides, they both spend money into oblivion. They both are going to create what's called hyperinflation, and what's going to help you is gold and silver. It's going to protect you financially. And yes, you should have some extra food because yes, there's going to be food shortages if you put price controls on food. This is just my take, but it's also common sense. I'm Tall Mike. Get out there, everybody. Have a great weekend, and we'll talk again real soon. Bye-bye now.